Hello everyone, welcome to Just Invest Today, and today I'm going to talk about a potential market crash. Yes, a potential market crash. We all know the economy is not doing well, and there is a very likelihood that we could be going through another market crash soon, since we all know that the market has to follow the economy. Like, that has to catch up sooner or later. So you never know, it might not happen, but it might happen. So I just want to go through 3 steps to prepare you for the next market crash if it comes. So today is August 3rd, 2020, and yes, we already had a market crash in March, but I'm talking about a potential for another market crash since the stock market has already gained all of it. We're probably like 5 or 10% off the market highs from before the crash in March. But I'm talking about another potential market crash coming up. Maybe, you never know, in a year or so, maybe 4 months, 3 months, no one knows. But our first step is to have an emergency fund. Yes, an emergency fund. We need to have this emergency fund just in case the market crashes and we have money on the side to put into stocks. So when your money's in the stock market, you do not want to touch it. So we have this emergency funds for all the stuff that you're gonna need, because when our money's in the stock market, we're gonna hold it in there for maybe 1, 2 years, and we're gonna see those huge gains, maybe like a 20%, 40% gain if the stock that you want crashes to lows. So yes, we gotta make sure that we have an emergency fund for all the other stuff, just in case you lose your job, or you're off work, or something happens to your family, you need it for school. So we're gonna have this emergency fund, so you're not touching the stock market money that you put into the stocks when the stock market crashes. So the second thing we have to prepare for is we have to be psychologically ready for the market crash. So what I'm talking about here is, if you already have money in stocks, don't be worried. You can't overthink things. If the market crashes 30, 40, 50%, whatever it is, do not rush to sell your stocks. Like, you got to be mentally ready for the stock to crash. And you're not going to rush to sell your stocks, because you're going to lose potential gains, and we are long-term investors. We're not thinking about the short term. And if if the market crashes and you're already in stocks and they're already good companies, that's when we want to buy more of the stock, because the stocks are cheaper. They're less expensive, right? So if you're buying good companies and the market crashes, that is a good thing, not a bad thing. So we actually want the market to crash. We want stocks to get cheaper. We rather buy stuff on sale. So mentally prepare yourself. If the market crashes, you're not going to be scared. You're not going to be frightened. Nothing of that. You're going to be calm and collective and be ready to invest. And the last step number 3, we gotta have a list of stocks that we want to buy. Yes, we gotta have at least a good, solid 5 to 10 companies, even more, that we want to buy, and order them to, like, the first company you want to buy, the second company you want to buy, and third company you want to buy. And listen, the best companies first, and then the least. So we're looking for solid, good companies, right? So when the market crashes, we already know our buy price. So we got to figure out our buy price for our stocks, and then we are psychologically ready to buy at those prices no matter what. You might be afraid because the market's going down, but we got to be psychologically ready. So when the market goes down, we're ready to buy. We're not afraid or scared to put our money into the market because it's crashing. We got to think long term. This will recover and this will come back. So yes, we're gonna have to make sure we have our wish list of stocks that we want to buy. Before you make your wish list, guys, make sure you're following the 4 M's. So the 4 M's is: first, meeting. You gotta understand the company. You gotta know what the company is about. Is it a company that you know and can evaluate? So before we get a company on our wish list, we want to find the meaning of the company. The second thing, we want to make sure it has a competitive advantage, a moat. So it's to stop all the competitors. We want to find companies that are act kind of like a monopoly. They have a whole sector to themselves. They make good money, like Amazon or Facebook. Apple, they're just dominant companies. Third thing, good management. You want companies with good management that are going to allocate capital effectively and give back money to the shareholders. That is very key. And then the last thing we want is a good price on our company. We want a very good price, a margin of safety price. That's the last M. When we get a company below our target value, then we can buy the company. So for that, I haven't really talked about margin of safety on this channel, but if you want to know more about margin of safety, go back to my first video. I recommend books on the margin of safety principle, which is very valuable. Phil Town has 2 books on it, 3 books on it that are very good, and there's a lot of knowledge, and it teaches you how to value a company. So those 4 things, look over. That's it, guys. Thanks for watching this video, and if you like this video, please like and subscribe, and I'm gonna get back to you later with another video soon. Later, guys. Bye.